All right, welcome back everyone to Nadlin Forum Podcast Daily. I'm Ruby Sturt here with Leo, and today we're diving into one of those topics that's always popping up in our emails. Why do mortgage rates sometimes just sit there, even when the bond market's having a wild ride? I promise we'll keep it clearer than an economist on too much coffee.
Yeah, good one, Ruby. So, we've covered this in a few recent episodes when we talked about the Fed and how their announcements shake up all the markets, including bonds. But people still get surprised when they check mortgage rates after hearing about some big swing in bonds, and nothing's changed on the rates sheet. They just think, wait, isn't this automatic?
Exactly. And I love this analogy I found. It's like when you've got a restaurant, right? And you're setting your menu prices based on what peaches or avocados or whatever cost that morning. If there's a crazy spike in avocado prices at 8 a.m., maybe you run back and update your avocado toast price by lunchtime. But if prices don't shift much, or it's just a little bump late in the day, then maybe you wait till tomorrow. That's pretty much what lenders are doing with mortgage rates.
That's actually a brilliant way to say it, and it annoys me how true that is. Because I remember when I started in real estate in Tel Aviv, this was 2003, bonds would swing overnight. The whole market would basically be on edge. But the banks, true story, they'd still pick their rates at noon for the day. Didn't matter if bonds crashed at 11 a.m., that rate table was locked until tomorrow. Americans do it a little differently. But honestly, most lenders here still only update once per day. That lag can throw people off if they're watching bond prices live.
It's funny, right? Because the media loves to shout about bond market volatility, but average folks shopping for a home loan just see no movement in their rate offers. It feels disconnected, but as you said, over time, those rates and the bond market actually walk in step. They just might be a bit out of sync now and then.
Right. Even though it might take a day or two or sometimes longer for lender rates to follow the direction that bonds are heading. But long term, if you compare the charts, mortgage rates do follow the bond market pretty closely. Just, sort of a delayed dance, you know?
Absolutely. And that's where all these little quirks and delays start to make sense. If you look at the big picture with some patience instead of obsessing over every headline. Anyway, can we dig a bit deeper into these lag times? I know we've seen it play out just this week.
Yeah, definitely. So, real-time example from 2 days ago. Late in the afternoon, bonds improved a lot. That, in theory, should have led to better mortgage rates. But since most lenders already set their rates earlier, those changes never made it into the day's pricing. By the time the new morning rolled around, bonds had reversed, so lenders felt, why change rates at all? It's almost like nothing happened, even though under the hood everything changed for a few hours.
And it's not even rare that, should I lock my rate or wait for tomorrow? Kind of roulette is something we've talked about before, like back in our mortgage market update episode. I think this is why some buyers or refinancers feel like they've missed a window. But the truth is, it's less about missing out and more about lender timing. The rhythm just doesn't always match the market swings minute by minute.
For sure, and to be fair to lenders, they don't want to be updating rates every 5 minutes either. That'd be chaos for their teams, and pretty confusing for borrowers. They want to keep it manageable, so one adjustment a day is the norm. But on days with huge bond market moves, especially late in the trading day, sometimes you see lenders ignore it, or they'll skip an adjustment altogether if the market reverses overnight. Homebuyers just see rates are the same and wonder if anything is moving at all.
I might be wrong, but isn't there also a bit of a wait and see built in? Like lenders don't want to overreact to one crazy afternoon move because things can flip back by the next morning? They're thinking about long-term trends more than just, what happened this hour, otherwise you'd get whiplash as a consumer.
Totally. That's why even if the headlines say huge market swing, The actual mortgage shopper might just see a flat line. But if those bond moves keep going in the same direction for a few days, that's when you really start to notice rates moving more consistently. All of this just means, patience is important. Monitor both the bond market and the mortgage rates if you're at the edge of making a decision.
So, to wrap up, the bond market is like the engine, and mortgage rates are the train cars. You can't expect the last car to start rolling the instant the driver taps the gas. Sometimes there's a delay, but eventually they catch up. If you're one of our listeners out there hunting for a loan or deciding when to jump, keep an eye on the trends, not just the minute-by-minute chatter. And call Nadlin Capital Group for the nitty-gritty, obviously.
That's a good place to end, Ruby. And we'll keep following both the headlines and the real numbers for you. Thanks for tuning in, everyone. Hope you learned something, or at least feel a little less confused than before.
Catch you all next time. Lior, have a great one, and thanks for the stories. Always makes it real. See ya, everyone.
Bye, Ruby. Bye, folks. Stay curious. Till next time.